In the studios, as we said before, with us is John Castore with Semper Home Loans. John has an awesome topic today. It's conventional mortgage versus FHA. Now, before you jump in on this, I just want to say I think that this segment was a wonderful idea because constantly we have people asking us, which one's better and why is it better, et cetera, et cetera. So I'll let you dive into the details. John, thanks for being a part of the show. Welcome back.
My pleasure. Thanks for having me. And yeah, a lot of your realtors will say, hey, ask John, give him a call and he'll go through the differences between conventional and FHA. And for you veterans and anyone looking for a USDA, eligible area, this is not for you. VA and USDA still have excellent numbers. This is for everybody else out there, whether to go with a conventional loan, which is a Fannie Mae or Freddie Mac program. That's the conventional side. And then there's always FHA, Federal Housing Administration. I'm not going to go through a history lesson today. You can look up, their history on their direct websites, fanniemae.com, freddiemac.com, and fha.gov. It takes you right to hud.gov, G-O-V. So you can look up their history, why they came about. And whenever you're having this conversation, it typically ends up being a discussion about private mortgage insurance. Nobody likes the PMI, nobody likes MIP with FHA, but the reason why these programs came out that you can borrow more than 20% is to take on the risk for the lenders. Lenders were very leery of lending anything on top of 20% down, so they insure it now. And that's what private mortgage insurance is. It does not cover you. This is not life insurance. This is not any type of insurance that covers you. If it's mortgage insurance for FHA, it goes directly to HUD, and they take care of any defaults to the lender and themselves. They take care of their lawyers. All the money is spread out that way, and they're making FHA is making a comeback with their reserves. That the reason why they increased their upfront and annual mortgage insurance premium was because of the crash in 2008. Yes, they lost it. They had $16 billion in reserves for this mortgage insurance for everyone paying, and they dropped it down to nothing. They're back up to $5 or $6 billion, so they may even decrease it. So this is September 2016. Right now, the clear winner, if it's a quick question, hey, who wins, conventional or FHA? Which one should I go with? If you have a perfect profile, the answer is always conventional. And the reason is the private mortgage insurance. The PMI for a conventional loan is typically more inexpensive than an FHA loan, depending on your credit score. When you hear conventional, think of the old conventional way of thinking, 20% down, no PMI. Well, now Fannie Mae and Freddie Mac have programs that you can bring 3% down for a first-time home buyer, and the minimum for everyone else is 5% down. So I wanted to give you the numbers. Instead of going through what I would do, I wanted to show you numbers. That's what people are interested in, and this is what I do when you call into me, is I have a Excel spreadsheet that I punch in. Okay, you want a house for $280? Bam, there it is. The median price in Rhode Island is about $250, so that's what I worked my numbers off of. Okay, conventional loan. This is a Fannie Mae Freddie Mac program for a $250,000 purchase. Minimum payment 5%. All right, 5% of $250 is $12,500. Yep. That makes a loan amount of $237,500. All right, so your total out of pocket will be around $18,000 for the down payment, closing costs, the appraisal, and the inspection. It'll be about $18,500 figure. All right, and then your monthly payment, this is where it gets tricky because PMI is totally based off of your credit score. It's a crazy difference. If you have a 760 or 780 credit score, the PMI for that on an annual basis is $380 compared to FHA, $380 per 100,000, 38%. 38 basis points, where FHA is 85% for the minimum down payment, which is $850 per 100,000. So the monthly payment, just the principal and interest, will be around $1,100 for each program, depending on, you're only putting 3.5 down for FHA for the minimum down payment. Where the difference is your escrow account. Your PMI is much cheaper for a conventional loan compared to an FHA loan. So your total payment on a conventional loan for $250,000 with a minimum payment of $5,000 would be around $1,550 to $1,600 depending on your credit score.
Okay.
And then over the course of 5 years, you will shell out $111,000, give or take a grand. So I wanted to break it down over 5 years to show you there's really not much difference.
Yep.
Now you're shelling out $18,500 for a conventional loan on $250. Now FHA 3.5% down is only $8,750, making your mortgage loan amount $241,250. They put on 1.75% of upfront mortgage insurance. It's a one-time fee.
Yep.
It's 1.75. I have a feeling they're going to go down, but for now, that would make your overall mortgage loan amount $245 change. So your total out of pocket with an FHA loan would be about $14,000. So it's a $4,000 difference that you're keeping in your pocket. And then your payment would be around $1,620. So it's not a huge difference in monthly payment because FHA has lower interest rates than conventional.
Yep.
So it weighs out to about the same. And then over the course of 5 years, which this kind of shocked me, you're shelling out $112,000. So
what was the other one?
$111,000. So there's
Wow.
not a big difference, but the deciding factor is, can I get rid of the PMI at some point? FHA, you cannot. It's on there for the life of the loan now. Hopefully they change that. So again, this is September 2016. Always revisit this. That's why conventional is the clear winner, because 3-4 years down the line, depending on how much you put down, as soon as you're at that 80% level with just a phone call, you can get your private mortgage insurance wiped out on your mortgage payment. You call the escrow department from your servicer, and then they say, hey, I'm at my 80%, what do I do? And they'll send an appraiser there. As long as you're at your 80%, your next maybe 2 months from now, you won't have a PMI payment anymore.
So I just want to interject right there real quick, because let's just say if you've used conventional, 5%, 10%.
Right.
Okay. If you use that program, and if you've done work to the house, like if you bought a fixer-upper, and if you've done work to the house which, made the value go up, well, that's great too, because then, you could be at your 80% as well before you may think, a lot quicker.
Right. And let's say you only qualify for it, because it's harder to qualify for a conventional loan. That's why, the quick answer is sure. Conventional all the way, but if you can't qualify, FHA is not a bad alternative.
It's a great option.
You know what I mean? And if you're buying a great deal, if you can refinance into a conventional, get rid of PMI eventually in a couple, 3 years, then don't put it off. Don't wait till you qualify for a conventional. I get the question, should I wait another 6 months? Or what if the rates are 7% again? I've been around that long. When we started, the rates were 7.5%, 8%. That could happen soon. You know what I mean? So if you qualify for something, don't get too mixed up in conventional or FHA. My point here is the numbers are very similar. The deciding factor is you can get rid of PMI eventually, but what are the rates going to be in a few years? If you're getting in the threes right now, that's still amazing to me. It's still amazing. People are complaining if they went up the last couple of weeks. It's still amazing rates. So it's a little less buying power, but we'll of course see what we can do. And you'll also get approved for more of a loan amount with FHA than you will conventional because of the ratios. So just call me. We'll go over it. I'll show you the differences, and then it comes down to what you want to find as far as a house.
John, what's the best number for them to reach you?
401-255-3314.
And you can also go to theroundtableradio.com, go into the contact section. A lot of our listeners do that, and they just type in a quick message. Maybe they might have a quick question, and John will contact you either by phone or email, whatever you prefer, on our off-air line. So good information,
There's
John.
so much more. Thanks.